Today is Monday, May 21st, and my name is Alejandro Zambrano, Chief Market Analyst with Trade Captain and Amana Capital. And as we always do, at this time in London, where I'm based, is I'm going to provide you guys with a quick update on the markets. We're going to take a look at things like the euro. I'm going to take a look at the pound today as well, and also some cryptocurrencies, commodities, and stock markets as well, like the DAX. But before we start, I need to stress that trading financial markets unfortunately is risky, and there's a general risk that we'll lose all of our invested money. For more on this, click on the risk disclosure statement in the very bottom here. As well, we have some webinars coming up this week. Nathan is holding a talk tomorrow about trading discipline. If you haven't seen any webinar with Nathan before, I think it could be well joining. It's always good to have a fresh input on markets, and Nathan here, he has experience of trading for many years. I think he started trading in 2007, and he also traded for a hedge fund, so he managed money professionally for many years. So do join tomorrow at should be, well, it says 4 p.m. London time. I think it should be actually 3 p.m. London time, but just join, and what we'll do here is going to send an update exactly on this is, but it should be 3 p.m. and not 4 p.m. For more on that, education and webinars. Okay, now let's get going here. If you're going to participate in the chat box, just need to be logged in. If you're watching, say hello, and as well, don't forget to smash that like button. Just click on the link here. It loads on YouTube, and there's a little like button. Okay, let's get going. So just to show you here, so you can quickly see here, it says euro dollar is down with 50 pip, and pound is down with 64 pip. You can also see here how dollar yen is up with about 60 pip, and Aussie dollar is unchanged, whereas New Zealand dollar is down with about 14, and then you have dollar CAD, which is literally unchanged. So you see a concentration here of dollar strength, and in particular against the yen, the pound, and the euro. And the decline here in the pound dollar should not come as of any surprise to anybody that watches my presentations, and as well that have been reading in the technical analysis section of this website. They do think we did post something just recently that I published. You'll of course also find analysis here by some of the other guys, but this sort of breakdown you're seeing here in the pound is as straightforward as it could be. It can't be much more simpler than this. A range bound market, and then eventually the price trades below. Now the only challenge with this one is that it happened in the middle of the night, so it's easy to miss this out unless you have limit orders in the markets. Now the pound dollar took out support. The next major support level is very easy to derive. Here's my daily chart, and you can see how the next major support level is December 15th low at 133.04. It looks like we're hitting that, so we have probably another 100 pip for this to decline, and then you have beyond that low you have the 132.18 level, which is the November 28th low. Could be reached on a break to December 15th low. Now ideally you're already short, because if you're short right now, you will probably need to put your stop loss up here. Obviously the more and more this declines, the more likely is it enough to put a stop loss here. So you look at least to risk about 130 pip, if not 170, and if we touch support you only make 100, so it's not necessarily optimal, but I think definitely this is going to head to the downside. And I do think if the market revisits the breakout level, I do think there's going to be a barrage of sell orders up here, and that's it really. Push up, people sell, go to the downside. Now here's the euro. Euro as well is trading to the downside, and I was definitely bearish when we looked at this last week. Now what I said though is that risk reward ratio wise it didn't really make too much sense to get involved. Why? Because we're selling at a low. Usually not a good idea to sell at lows. Now the market have continued to move to the downside, and if you flip to the daily chart you can see that the market is now challenging this double bottom from December 12th. That specific level is 117.13, so pretty much at that level. Now when the market trades so close to a support level, many times it will breach, And you can look here at Forex sentiment. You can see that 72% of traders are long the euro versus the USD. Now these are retail traders, and they're long this market, and that suggests to me that probably the euro will continue to move to the downside. Now, with that in mind, I think we will potentially break this level, most likely break it, and then probably go down to this level here, which is the actual level is 116.50. Now this is psychological level. It's not necessarily a major level, because the next major level is November 17th low at 115.54. So if we want to get involved here, unfortunately, it's just about the risk-reward ratios. You know, it does not make sense to sell here. We need a little bit of a pullback, and I think if we reach the breakout level, this sort of cluster of resistance, it could potentially be fine. I think the market will swing up. You got your 5-day EMA here, so you look at a risk of about, the actual level I'm watching is this level here. Okay, this level here. If I flip to a 1 hour, you'll see it better. It's this level here, more or less. This area here. So that's why I have my stop loss just above it. And this is the so this is 118. Sorry, I got a bit confused here. There we go. Risk about 100 pip. Goes down to the low, make 83, and goes down further 150. You might say to yourself, well, I missed this out. Well, there's nothing to miss out. It was good not to trade this on Friday. The risk reward ratio was not there. There's other stuff to trade. Again, the pound, that terrific opportunity here, trading wise. And there's a ton of these updates across all the markets. That's why if you look here, I'm not married to one market. I look at all the markets, and I look for big setups. Even in shares, I look at setups. So don't be too worried if you missed out. Now let's take a look at Bitcoin. Bitcoin, as you know, it turned bearish. It went down, got it because we were long, right? So I got stopped out. I wasn't trading this directly, but they all correlated, so the same thing more or less. So got the low, pushed to the upside, then push lower, and then up. And here, the May 14th high remains that trend defining level for now. Now take out the May 14 high, and yeah, we might push to the upside a bit, but fortunately guys, here Bitcoin is probably going to remain boring for quite some time. You can see how it's converging, and this is all fine. It's all fine. This is very typical for the markets, and already right now there's very little demand to trade this, and that's actually a good sign, because people are starting to think that this is boring. But it's just the, I don't want to be rude, but it's just okay, I'm not being rude if I say the laggards, or like well, new to the market, rookie sort of traders. I mean, everybody's been a rookie at one point, but you know, a lot of people got involved here at the highs. Now this is a logarithmic chart. Now get rid of the logs and it looks very different, and a lot of these people are still down with about 50%. Now what's interesting here is that as this starts to turn bearish, the same people, or more sideways, the same people that didn't buy up here, or that bought up here, are gonna say, oh, this is silly, I'm gonna give up on this, and then they give up. And then in a quiet day, probably well, I'm not sure we're gonna break out in June, but probably when everybody is watching the World Cup of football or something like that, which I think starts on the 25th of June or something like that, I don't know exactly. But when it's very quiet, maybe in August when everybody's in the beach in Europe, we'll have that breakout, and then it moves to the upside, and then you read about it on the front page of your local newspaper, and at that time the market is probably could be at 18,000 again. So it will become very interesting, but right now this is gonna converge. I don't think it makes sense to be very heavy in this market at all. Okay, here's the price of crude, and crude continues to move to the upside. Now there's a very simple solution to what's going on here. So you see this little line? This is a line we plotted here a few days ago, and I said if we take out this level, this is probably going to head to the upside. We got that entry on the 17th. The market moved down, up, down, and it continues to move to the upside. Now traders that are trading that short-term trend are probably putting stop loss orders at 70.23, which is this level here from May 14th. And this will probably continue to trade to the upside. And if you're trading the short term, then this is the level you do want to watch. Now I think this is probably going to go up and is an opportunity to trade. The alternative, which is my preference, is that the alternative is to buy at 69.29 down here, which is sort of my preference, because this market is very special. It's a bit like stock markets, which is that sometimes it's going to be stuck in this very low volatile environment where it just drifts to the upside, and I think that's where we're in right now. And then sometimes it has like a steep decline, and sometimes very strong declines, and becomes really volatile. So it's sort of, volatility is very clustered, very low vol or high vol, and the high vol opportunity is this one down here. So a decline to 69.29, I think that would be a better option, and then just stops below this level. Now here's gold, looking great, looking terrific. Here is something we highlighted. It was one of the top traders for March. March and April and May. It's also something I communicated here for, and I said that the market here was very bearish. Just ignore it. Don't do nothing until when? Well, until we take out 1,301, 303, and we did quickly went into profit. And then it did not even manage to push up to the breakout level again, and it's not just continuing to trade to the downside. This will most likely afford us the opportunity to reduce or we can already today reduce the stop loss. It was up here, we can reduce it now to this level here. It's not the May 11 high, it's just level. And I think as this goes to the lower side here, we could potentially just put the stop loss up here. But for now, we need to leave it open like that, further away. And if for some reason you have some bad data from the US or politically something changes, we could potentially spike up again to this sort of breakout level, and I would focus on this market from pretty much 12.99. And I think from this level the market will probably continue to trade lower. I'm very confident in this idea. This is sort of a very good setup, because the longer something trades sideways, when you have that breakout, the more interesting this will become. And this sort of break to the downside is very similar to the situation you can see, for example, with the pound today. Finally, this is the German DAX, and the German DAX is bullish. We took out this high here. This was the prior May high. We took out that level on the 17th, which is Thursday last week, and I said if we take out that level here, traders are probably gonna put stop loss orders here and then gonna target higher levels, maybe all the way up to the January 29th high. We moved up, and if we go back to the breakout level, which is pretty much 13,050, I think traders are gonna buy, and then we're gonna continue to head to the upside. And that, guys, is today's overall general overview of the markets. Let's take a look at the calendar. Let me see here. So, bank holiday in Europe, even in Canada, I think it is. OPEC meeting, nothing really extremely interesting today. Tomorrow, inflation report hearings. Yeah, nothing really sticks out. UK Consumer Price Index, that's gonna be interesting. Wednesday, May 23rd. So bit quiet until Wednesday. Then from there is gonna be UK data, which again sort of suggests to me that the technicals will dominate, and I do think most likely all of the setups I shared with you guys will continue to remain in place. There's no in particular strong macroeconomic data that's going to push things and sort of break trends. Okay, join me here tomorrow. Don't forget to follow me as well on Twitter if you're interested. My Twitter handle is AlexFX00. I will publish my article. Sometimes I publish retweets the other guys as well. If you have any questions as well, you're most welcome just to send me direct message, and that's it. You can even WhatsApp me here as well. However, though, don't do that today because I don't have access to that phone number right now. So messages is the best. Alright, have a good day. Thanks so much for watching, and if you like it, please don't forget to share. Don't forget to spread the word about this new website, which is tradecaptain.com. Thanks.